Hi everyone, let's have a look at my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the triangle because I see it appearing everywhere. People see the form of a triangle, but from an Elliott Wave point of view, this is not a triangle, and I will explain by following the rules of Elliott Waves why that is the case, and it has mainly to do with the volume. But let's go over the rules and hopefully you also learn a thing or two. So first of all, a triangle is a 5-wave structure of which all the waves should be a 3-wave structure, meaning a 3-wave in A, 3-wave in B, 3 waves in the C, 3 waves in D, and then eventually ending with 3 waves in wave E. 4 out of the 5 waves have to be a zigzag structure, which is a 5-3 5-wave move, where this 3-wave corrective structure can be any corrective structure. So in this case, it's an A, B, C in wave A that is possible. In this wave B, that's quite complex. We have then an A expanding flat in the B and then a wave C. The problem over here is this little comeback to the upside. Preferably, wave C was a direct move to the downside, but we got this move to the upside, so one can argue this is actually a 3-wave structure instead of a 5-wave structure. But okay, let's disregard that. In this case, A, B, C, right? And then a wave B, followed by another zigzag in wave C, another finished zigzag in wave D, most likely, which I will show you on my micro count, and then now potentially working on another ABC in a wave E. So in this case, we might have 5 zigzags in this triangle. The only problem is, and I say we might have 5 zigzags, but from an Elliott Wave point of view, this structure over here doesn't look like a nice 5-wave zigzag structure to the downside. So that brings some doubt into this scenario. Then usually, if 4 out of the 5 waves are zigzags, that leaves one wave that usually isn't a zigzag, and that's usually wave C or wave D. So wave C over here or a wave D, they tend to be more complex, or at least a different structure than a zigzag, and that's absolutely fine. But the main problem over here is the volume. So in a triangle corrective pattern, what you want to see is volume decreasing when the pattern is forming. So the highest amount of volume in wave A, which in a triangle is also the biggest wave. And then you want to see over here, you see the volume of wave A, and then actually you want to see volume decline while the pattern of the triangle is forming. But as you can see, that's the problem over here. Volume didn't decrease in this wave B. Instead, it actually increased average-wise in this wave B, and that is not something you like to see in a triangle, which is also for me the biggest problem in this potential triangle. So another thing that I think is important is that if everyone is making some triangles on a chart, what's the likelihood of it playing out, right? Like most of the traders lose money. The first thing you learn in trading is probably trend line and patterns. So these type of triangles or other type of patterns on a chart that beginning traders can easily spot very often have fake outs, meaning that, for example, you have the lower trend line, price moving to the downside below the trend line. What do people do? They short over here, the breakout shorters, right? They do something like this, expecting downside, and then price comes back into the triangle to the upside, stopping them out. And then the same can apply to the upside, where price instead goes to the upside, breaks out, people go long, and then eventually what price is doing is come back to the downside. So this is something you really have to take into account when one of these trend lines are going to be is going to be broken. Like, make sure you think about, hey, might this be a fake out? Now, of course, we're going to observe what's going to happen on price, and if there's a potential fake out scenario, I will let you know. As it stands now, price is still ranging inside the triangle trend lines, to say it like that. But of course, then again, I'm not really looking at this structure to be a triangle. So instead, what I'm looking for at the moment is a complex structure in a WXY scenario, where we have a 3-wave structure in a wave W, then we have a 3-wave structure in a wave X, and then we are looking for a 3-wave structure to the upside for a wave Y. Now, what is interesting with the triangle scenario is the potential wave X over here not already being finished, but potentially having another leg. So that means that this is a wave W, then wave X is a 3-wave over here, ABC, another 3-wave to the downside, and then another 3-wave. So creating basically a nice 1, 2, 3-wave structure in a wave X, and in the triangle, that would be the high of wave E. So then wave X over here and wave E are quite similar, which therefore is important for a potential fake out, because after the potential wave X is in, and by the way, I should show my target box that is still untouched. So there's a target box over here for a potential high of X, because we don't know, at 27.3K to 27.4K. So if price is going to move to the upside, can be quite interesting to maybe turn around over here to the downside. So people then think from a triangle perspective that it might be the high of a wave E or whatever it is. Maybe we're not going to take this high because officially from a triangle perspective, you're not allowed to take the high of this wave C over here. So wave E should be lower, but hey, we don't know. We'll see what happens on price, but something like this, maybe to the downside, then people think, hey, we're breaking out of the triangle over here, right? At the daily naked point of control, but instead we enter the support area for this wave Y and then a WXY scenario. So at the moment, price found support on the 0.618, which is absolutely fine because this wave X could potentially already be finished. Could be over here, with wave Y potentially being finished over here as well. The problem that I have now though is that this wave W is very long. Wave X, that's fine, but wave Y is very, very short. So I would prefer wave Y to be a little bit longer. Even though it is bouncing on the 0.618, which is a common target for wave Y, I would prefer this to not yet be the low because this wave Y over here is incredibly short compared to the length of this wave W, and time is important in Elliott waves as well. So preferably wave Y is going to have maybe another low where we then have the daily naked point of control and this whole target box for a wave Y, which is between 26.6k and 25.8k. However, if price goes all the way down here, you know, we're entering this wick like very deep, and the likelihood of taking the low is going to be quite big. And I'm actually still looking for a move to the upside where we have some interesting highs, as well as the highs over here at about 28.3k and the target box between 28.9k and 29.2k. So there's still some interesting resistance areas as well as liquidity to the upside, but I'm not so sure if this wave Y is finished already because of time, right? If we then go to the micro scenario and actually look what's been going on the lower time frames, we could then have this as a three-wave structure over here in an ABC. So a 1, 2, 3, 4, 5 wave A, followed by a three-wave structure in this wave B, where we ended with bearish divergences, as explained in my previous video. Very, very nice. For then eventually another 1, 2, 3, 4, 5 wave move to the downside. Now in this scenario, this is then the low of wave C at the 0.618 taken from the high of A to the low of A to the high of B, which is a rare target for wave C, but a target nonetheless. Now it's interesting. This move to the upside is backtesting the target box that we have, which now is acting as resistance. Besides, we had some new resistance levels here as well. We have a daily naked point of control at 26.9k, which has been hit. However, we also had a high time frame weekly naked point of control at 26.9k and the current monthly point of control of the whole month at the moment. So big resistance area where, as you can see, price found resistance, now moving to the downside. And this is important because one could count this structure to the upside in an impulsive structure where this is a wave 1, 2, 3, sideways range in a 4, and then a wave 5. Highest volume over here, volume peaking in this wave 3, which is what you want to see. So if price is gonna maybe go a bit lower, but then move up and take this high, that could be wave 5 potential, and that is important for the continuation of this structure. If price is moving to the upside and takes the high of 3, we have likely, quite like high probability, a 5-wave structure potentially finished for then a corrective move to the downside, after which you can expect another 5-wave move to the upside. So basically trading wise, one can then trade the retracement, stop loss below this wave C as invalidation, and then continuation to the upside is expected. However, if price is moving to the downside instead and starts to enter the price range of wave 1, which is at currently 26.7k, so if price is going to continue down and enters this area over here on the right, then it is more likely this is a 3-wave structure and potential downside is very much on the cards. So where then eventually this low might be taken and we might find our way towards the daily naked point of control at 26,350, which also includes the low of wave W for maybe a liquidity grab, finding support on the support area, and then a continuation to the upside again, because eventually I'm still looking at the moment for a move to the upside, preferably a bearish scenario over here, which is actually quite difficult to find a proper bearish scenario, is a 3 wave already finished, and then a 1 2 1 2, and then now a bigger 3 to the downside. However, volume is very much slacking if this is the beginning of a bigger 3 to the downside. And also if this is a wave 1 2, then again this little bump to the upside is basically destroying a nice 5-wave structure, 1 2 3. And where's wave 4? You know, where's wave 4? This looks like a 3-wave structure. So yeah, it's not very easy. I'm still preferably looking for a move to the upside. Then the divergences, always important to check out the divergences. We have the bearish divergences, 2 highs over here, lower high, where the target is going to be 26.3K. But we also have bullish divergences over here. Higher low on price, lower low on the CVD, where the target is 27.6K, and we have a newly formed bullish divergence here where the target is 27.2K. However, the first divergence that comes up is usually, or probability wise, the one that has the highest probability to play out. The first one was this bullish divergence with the target at 27.6. The second one was the bearish divergence, and then the third one was the second bullish divergence. So basically what I'm saying is the bearish divergence has a higher probability of playing out than the second bullish divergence, and that is something that is important. And if price would go to the downside and takes this low, it does not invalidate the bigger bullish divergence. You can just move the bullish divergence to the right, because it is very likely we're still going to have bullish divergences if price is going to go to the downside here, for then eventually a move to the upside. So I hope this video was helpful or valuable to you. Please check out the macro and the high time frame video if you're interested. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.